Welcome traders. So in this video, I'm going to be going over a recent indicator I came across that I thought was a great indicator. After trying it so many times, this indicator I disapprove of because of the inconsistency that it has. So this indicator I'm going to go over is the higher high, higher low live indicator by Lonesome the Great. 4,000 people are using this indicator, and I will show you why I do not use this indicator. Well, no longer use this indicator. So this indicator, what it does, it gives you a zigzag mix, and that's what it has: zigzag with green lines, and it gives you a basis of this is the fixed inputs of what this is. It's just basically a zigzag tool with the 65 being overbought and 35 being oversold, which is basically the RSI tool altogether with a 10 period moving average. So it takes 10 candles to be able to even print the higher high or higher low. 10 candles above, 10 candles behind, 10 candles in front. So this gives you somewhat understanding of market structure, but not true market structure. So the textbook way of market structure tells you to buy at a higher low and sell at a lower high. In this instance, you have this is a perfect example, actually. In this instance, you have a higher low that has been broken. So in any structure, when a higher low has been broken, you are supposed to sell. So from this point on, you're supposed to sell. All throughout this entire time that it pushed up and created a high. Okay, anytime a lower high has been broken, it's supposed to be a buy. Now you're in a very interesting situation. You have two signals that tell you one to go up and one to go down. Now what do you do? And this is where this indicator gets very tricky, because you just put your hard-earned money up for this indicator and you're following it along. And as you're following along with this indicator is telling you mixed signals. This indicator, at its bare bone basics, is a reversal indicator of how the market structure is. It is a okay tool for the most part, but over a long period of time, you will lose money with this tool. And in this indicator, I can promise you that. Many people have said they've done great with it. You can make money off of it. I've done it with myself, but consistency wise, it's not a good tool for the long run. Eventually, you'll lose money because this tool disregards all of these little movements in the market that give you hints and clues of what's going on. So this is what I'll show you. So let's go ahead and take the indicator away, and we'll see how many moves the indicator actually missed. And this is all information that is needed to help you as a trader succeed. Let me go ahead and delete that. Start all over. So all of these movements are here to help you. And if you need any more videos on market structure, I have other videos that are on my YouTube channel with market structure to help you. So you're missing all of these moves, because this could be a move, and this could be a move, and this can be a move. These are all little clues that the market is trying to give you to let you know what it's planning to do structure wise. Structure was broken here. As you can tell, it broke this previous structure, came back down, and you missed that whole head and shoulders. And you come back down, and you come back up. Now you're starting to see the actual true market structure start to play out of all the times that the market paused and stopped in the market, giving you those key indications of what the market was trying to tell you the entire time. And what did this tool do? It did not tell you anything. It skipped over all of these tools or all of these little clues because somebody thought it'd be really good to help people, which is fine. But the tool it's inaccurate. And this is all the stuff that you would have needed to succeed. And now you have a break of structure here, and it went all the way down. And I'm gonna stop right there. All right, cool. So we're gonna stop right there and disregard that last little piece. So look how much structure that you missed. Came up, went down, missed this whole drop. Came up, came down, came up, came down. All of this happened. You had a break of structure here to go up. It's saying that this is the lowest point, but as the indicator prints, it will actually keep that indicator keep printing and printing and printing that until it breaks structure. So in this indication where this high was created, it would say it's a lower high, lower high, lower high, lower high until it created a high, and then it can continue to keep going up with no regard of stopping. So in this instance, same thing here. You could say lower high, lower high, lower high, and eventually break a high or create a high and continue to keep going. This is a perfect example of that. So lower high is what the indicator will read. Lower high, create the high, and then go as high as it wants to do. It doesn't have to stop anywhere. It can go as high as it wants to go. And you're like, oh, but it's going to turn around. It always turns around. It's just a market cycle. It's going to turn around. It does not have to. You can continue to keep going. And that's how you're going to lose your money. So if you choose to use this indicator with everybody else, and that is fine by me if that's what you want to do. I personally do not use this indicator anymore because I understand the rules of how this indicator works. And I understand that it is no longer a good indicator for myself because it's just inconsistent over time. This is not an indicator that will change your life and actually give you money in the long run in a sustainable living. With that being said, I hope you guys have a great day. I'm going to go ahead and end this video, and I'll see you guys in the next indicator video.